Hi everyone, this is Jason Burack of Wall Street for Main Street and managing editor of the News Doctors and independent financial journalist Eric Dubin. Welcome back to another Welcome to Dystopia podcast. This is episode number 27. Eric, the economy seems to be doing really well with 151,000 jobs created this month.
Yeehaw, let's have a party. Labor Day's here. It's funny because the last jobs report was an upside surprise. And that came, in fact, in our last show, if memory serves, we were talking about how the timing of that was absolutely perfect to try to season the expectations for the upcoming election, keep people happy. And traditionally, if you look at, polls and the correlation between what's going on with the rhythm of the economy, sometimes I think it's been in 7 of the last 8 cases that the performance of the economy going into the presidential election, in fact, determined whether or not we got an incumbent coming in where the economy is doing well, or an incumbent gets kicked out if the economy is doing bad. So, the powers be, our lovely dear leaders, they understand this stuff, and they understand how to keep the little people pliant and going along with the program. So that huge upside surprise that set the stage for Jackson Hole and all of the job owning that we had to endure last week, and Stanley Fischer going on to CNBC and putting on the exclamation point following Yellen's speech, and we're going to have interest rate normalization, and we can begin to normalize basically the subtext is we're going to fix the mess we created, don't worry. and lo and behold, we get this report, and it's a 151 print, 151,000 jobs being printed. The expectation was about 180,000, and all of a sudden, this kind of takes a little bit of the fear in the marketplace about the Fed taking away the punch bowl and raising interest rates as early as September, which was in fact the message that these bozos were trying to signal in terms of their job owning messaging to the market and managing expectations. So they push on the gas a little bit in terms of making people fearful of liquidity getting tighter last week. And now we have a little bit more of an easing back. It's this cycle of, it's almost like a cat playing with a mouse. I mean, the way they manage psychology is actually rather impressive to watch. It's something to behold. But I think that's where we are, and then how that plays into where markets are. With respect to the precious metals, I think yesterday we turned and bottomed. We've got miners taking off today, really strong performance in the market for precious metals, and it all looks like after Labor Day, traders coming back, more interest in terms of the seasonal strong periods with India coming online, and within about like a week and a half or so, they're going to be doing a lot more purchases to be able to build up the inventory channel in their jewelry industry there that serves the giant consumption that is following the Festival of Lights, Diwali, and the wedding season and all of that. So all of those things are like, in the next 4 months before us. And I think we're going to start seeing precious metals move a lot higher. I mean, we've been going through this 2-month period of forced artificial consolidation as the cartel has been just trying to beat the crap out of metals and keep things down, and they really haven't been very successful. All they've been able to do is get us to go in a sideways pattern, with the exception of the last week where silver was finally pushed down, and we've had this nice test of 1850, which is exactly where you'd expect the dip buyers to come in, and they're buying aggressively. We've got a war going on. Excuse me, I'm losing my voice. You get something to drink. Got a war going on between the longer players on the COMEX, the paper guys that are buying. We have new monies coming in from the 95% of monies under management of the conventional finance world that I speak of all the time, and that's what's driving this. We're seeing new interest from the conventional finance world coming into precious metals, and it's coming in very, it's like punctuated bursts, and they're sophisticated buyers. They know what the hell they're doing. That's why they bought this dip at 1850 religiously in the last week and a half, and we didn't go any further to the downside. So I'm speaking a lot about silver in particular for a reason, and it's that I think at this point it's showing a pretty clean signal of where the sentiment is in precious metals, and silver performing really strong today versus gold. Miners also have that quality as well when it comes to signal value. So all told, this is really exciting. I'm looking at the trading action today and looking forward to the remainder of September, because I think we're going to go a lot higher.
Yeah, Eric, on that major weakness, I think the Chinese buyers who weren't chasing the paper price higher, they don't want to buy physical metal when the paper price is going higher. They're waiting for a large dip in the paper price to come back in and start buying physical gold and silver. So this probably, I wouldn't be surprised to see.
I think they are.
Yeah, I would.
And I don't think a lot of people speculate about, and we've heard for years, people like Ted Butler going, the Chinese are the other long on the comics. And frankly, I don't think that thesis had a lot of merit to it. I think they're just in the comics around the edges. They mostly are buying on their own exchange. But what we do have is the insurance companies coming in, and we'll be speaking later in the show about what's going on with the pension system in our country and whatnot. And these guys are I would hate to have the fiduciary responsibility of managing a pension fund these days. I mean, can you imagine the horror? Negative interest rate paradigm. Nothing to buy that's reasonably valued, and some of these people are beginning to get into precious metals. That's what's happening. That's why we have seen the COMEX be so resilient when it comes to silver market in particular, but gold too.
We are in an economic minefield nowadays, Eric, so it's not just the pension funds that are having problems allocating capital. Everyone is trapped in the minefield. Even the central bankers who put us, and the politicians who put us in the minefield, who, drugged us, they roofied us, they tied us up, they put a blindfold over us, and then they dropped us off in this minefield where, we don't know if we're stepping directly on a mine that we can actually see. We're going to maybe avoid, obviously, the mines that we can see, but we don't know if there's a mine 6 inches or a foot or 2 feet below where we're stepping, and that extra pressure of putting our body weight on something could trigger something and blow it up. Yeah. So I think that's a good analogy that we are trapped in an economic minefield. You did bring up some interesting points. JP Morgan, our friend Louis Camersano at Small Gold, he has good articles on JP Morgan's silver holding, how they're loading up on physical silver and also gold and silver stocks. So they've been buying the dips and adding to positions. Lewis also did extraordinary work on Norway Central Bank, joining the Swiss Central Bank, owning gold and silver shares. And that's not the Norway Sovereign Wealth Fund. So the Norway Sovereign Wealth Fund, I think, is a separate entity, maybe buying gold and silver shares and hedging it. But his article says Norway Central Bank. So I think that's two different entities, potentially in Norway, who could be hedging their oil exposure and buying gold and silver shares. They have over $1 billion worth of gold and silver shares. Yeah. Now, Eric, I want to bring up the point, too, about the jobs numbers. So even if we did have 180,000 jobs that were created, in the whole term scheme of things, with all the people that want to go back to work, the millennials that just graduated college and are looking for a high-paying full-time job, maybe they have a master's degree, that's a lot of waiters and bartenders that are going to end up with lower paying jobs if they're lucky. But those fake jobs numbers, I don't think they're real. I think they're basically pure fiction that the Bureau of Labor Statistics just created out of thin air. And I'll provide some evidence for that. Robert Wenzel over at the Economic Policy Journal, he just ran an article today saying that Washington, D.C. just had a record amount of firings for waiters and bartenders in the last 6 months. The amount of firings of waiters and bartenders in the last 6 months, Eric, was so large in Washington, D.C., it's a 15-year high. So,
but that was tied to a minimum wage hike, was it not? I don't know.
Yes, but look at other cities like California and Seattle that are doing that as well. So, I mean, a lot of these other metro areas, a lot of them in major cities are run very similarly with their governments. Obviously, not every single one of them is going to be the exact same, but the general theme is, forced wages higher, more regulation, more taxes. If you're in New York City, you have the drink laws with the soda cups that Bloomberg has imposed on other stuff. But each area is similar. So I just don't see the economy, the real economy, creating a lot of new high-paying full-time jobs. Maybe some small technology industries that are starting to grow. I think there's good revenue growth in some of those still, like cybersecurity, There were some large hacks of the SWIFT payment system recently, and there's just enormous amounts of cyber attacks, whether it's individual consumers with identity theft or corporate espionage, or governments attacking businesses looking for intellectual property. But other than that, I don't think the economy is really creating a lot of high-paying full-time jobs. So I think a lot of the statistics that are coming out, whether it's GDP, they're just not jiving with what we're seeing in the real economy. Go on Zero Hedge and look at all the evidence that we're seeing in the real economy with the container ships. We just had, I think, the 7th largest shipping company that ships container ships out of South Korea go bankrupt. So there's so many more examples I could cite. It's actually depressing looking at all the different articles on Zero Hedge, but at least it's the truth, right?
Yeah. Yeah, we are in an economic downturn. We're already in a very strong recession in the United States, and there are countries throughout the world, significant economies like Brazil, that are in outright depressions with 30-plus percentage declines in their GDP. I mean, the kind of statistics one can look at that are not easily manipulatable demonstrate that we are in a very powerful economic downturn. But at the same time, we have this kind of counterbalance of all of the monetary the liquidity that's being put into the system, and then God knows what the heck that we're going to see within a month's time come to the news front when it comes to fiscal infrastructure spend. I mean, the nice thing, I guess, I use that word advisedly, I guess, not exactly fun to watch the end of the Grand Keynesian experiment unfold before our eyes, but it is happening, and things get crazier as we move forward, as we often joke.
Yeah, and I would say, the narrative after 2009, when the Fed started, when the banks were allowed to change their accounting rules, and the Federal Reserve started pumping lots of money into the system, at least in the asset markets and the capital markets, that we had this fake recovery from 2009 and 2015, and a lot of people believed it. A lot of businessmen believed it. A lot of Wall Street money managers believed it. A lot of foreigners looking at the United States thought it was better and believed it.
The entire establishment believed it. Anyone, just looking around, oh gosh, these limousine liberals, etc. My cousin who went to school with Bernanke saying in Thanksgiving for 2 years running, Bernanke saved the world. These people are completely deluded with what's going on because they believe their own cooking.
Yep. Well, they want to believe. They want to believe that the policy actions they're doing, the work they're doing at the Bureau of Labor Statistics or the Department of Labor, the Federal Reserve, is actually helping the economy. It's growing things. So they don't want to believe they're a detriment to society when they actually are. So it's a tough mental position that they're in. They don't want to admit that a lot of the work they've done is actually, negative to society. Okay, well, we have a lot of crazy news stories that are coming out. So first of all, there was the rumor I heard that Obama actually called Alan Greenspan to yell at him for recommending gold and talking about how there's massive increases in inflation and stagflation growing. So that's something very interesting. We got these academic economists, whether they're at the Federal Reserve or at Harvard University, coming out with all these kinds of crazy proposals, Eric. We have Ken Rogoff, who wrote This Time is Different with Carmen Reinhart about, government debt. He just came out with a new book called The Curse of Cash, and he's former IMF chief economist as well as a Harvard professor, and he's talking about elimination of all $100 bills, $20 bills, and even $10 bills so that criminals will have a more difficult time doing business, and all ordinary citizens would eventually have to use electronic cards for payments, transfers, etc.
Yeah, the old criminal argument, fake as it is.
Well, that's just going to destroy our freedoms even further. I mean, obviously I could see the positive saying, oh, it's more convenient and less chance of a robbery of a criminal coming up criminal coming up. Yes.
I mean,
that's not the real reason.
The main reason, the single most important reason for all of this nonsense is the trap that they have that our policymakers have set for themselves, and the problems that the system has engendered in and of itself. And the only way to fix it at this point, per their playbook, is to be able to at least theoretically, have the option of doing negative interest rates. And you cannot have negative interest rates if you have a cash society and people being able to escape the system simply by putting cash under the mattress. That's what this is about. It's not about trying to go after drug dealers or all the other stupid excuses that they tell people in the media, and trying to, bamboozle us and pull wool over our eyes so that we'll be happy-go-lucky with our mobile phones and being able to do our transactions or whatnot.
It's also totalitarian, Eric, because they want to track and tax every transaction. I've read articles saying how Europe has over a 40% underground economy of their total economy that people like working off the books.
That's right.
So government wants to broaden the tax base because they know that they're going to need to go after more sources of tax revenue going forward.
And in the case of Europe, it's not like, you're talking about a less developed economy. And I mean, globally right now, the underground economy represents 20% of all money spent worldwide. And it's you would expect to say in like a poor country in Haiti, for example, for someone in their day-to-day life living where 99% of their expenditures are cash. But when you say 40% of an economy the size of Europe, I mean, that is a prize that our dear leaders want to be able to wrap their greedy fingers around, and being able to control the tax base that comes off of that, and the ability to control and have total information awareness about people and their lives based on everything that they do from points of purchase. So totalitarian, dystopian nightmares are extraordinary when one contemplates what may happen with a cashless society. But we've talked about this before too. There's kind of like this problem, so to speak, in terms of being able to execute something like that, because it's ironic too, because the justifications we frequently hear about cashless societies, we're going to stop criminals. Well, then one of the reasons why they haven't executed cashless society is because the criminals in government and the people in government who work for the criminals outside of government make too much money because of the ability to use cash in criminal and illicit ways. So, I guess that's, the one thing we got going for us is corruption might save us from totalitarianism. How ironic is that? But the state of our economy is so bad, and they have fucked things up so bad, that the idea of a cashless society is something that these idiots are now even willing to contemplate to fix the mess they've created. It's unbelievable. Sorry for the rant, but I think I
love
it.
Our listeners will love it. Our listeners will love it, and I've also gotten people they want I guess I can't win either way. I've got people, when I say flustercluck, people get angry that I didn't cuss. When I say clusterfuck, people get angry that I do cuss. But the global economy is one giant clusterfuck right now, and the people in power, they're not taking any responsibility for the mess they've made, and yet here they are. They
don't even understand how they made the mess, and then they certainly don't know how to fix it.
Well, they're going to blame capitalism. They're going to blame free markets. They're going to blame the evil, greedy it's only the private sector's fault, the evil, greedy tax dodgers, the evil, greedy corporations, just like how the European Union is going to change the rules on Apple after Apple fully complied with all the rules and put their money in Ireland, which lowered their taxes to improve their economy. So, this is just what happens with governments. The government, when it doesn't like something, they'll just change the rules on you. So, I mean, even the large corporations like Apple aren't going to like the government, what they're doing with the rules changes. And now I think they have a $13 billion tax bill coming up. But, I mean, these academics, Eric, are so crazy. They don't even realize it, too. I mean, last week, look at the crazy stuff that came out of Janet Yellen's mouth. It was doublespeak. Because she said, okay, well, the real economy is improving. We can probably raise interest rates at least once or twice the rest of the year. But if there is a crisis, and this is the doublespeak, we'll just expand our balance sheet by at least another $2 trillion, and we'll have everything covered. How can both things occur? You can't. You're wrong. If you don't know what you're doing, if you're saying that we can fix things in both scenarios, then we have John Williams, not the one of Shadow Stats, the one who's the San Francisco Reserve Bank president. I did a video on this on the Wall Street for Main Street channel. Go and look at it, short video. He wrote some academic white papers talking about how that none of the stuff Janet Yellen said, how they should start doing inflation targeting to increase the inflation rate to get people to spend money faster, and that would get people to spend and improve the economy. So and create even more inflation, because there's not enough inflation. There's even more deflation. So we've got crazy academics making policy decisions that these guys listen to, and the one academic, Eric, that everyone in D.C. loves, whether it's the financial media, whether it's the people at the Federal Reserve, whether it's the politicians, is Larry Summers.
I knew you were going to say Larry.
Yeah. I don't know why, but he is worshipped like a demigod around here.
Because he's nominated as the most articulate spokesperson for the interests that he represents, and that therefore, behind the scenes in media, the producers of television shows or the managing editor of the New York Times or whatever, they look very favorably on golden children or golden child nominations like this. And that's what's going on. That's why people like him or Greenspan before him or Bernanke, they get, this kind of cultural sheen of authoritative, like some savant who has the ability to make, the perfect policy proscription to save us. And he's at that apex right now. He's considered to be the smartest and brightest of our economic elite, and that fucking's telling you a lot.
Yeah, well, he was the one saying that gold. Yep, and he was the one who said Gibson's paradox, that gold prices need to be manipulated because they affect interest rates. Yes. So that started under Robert Rubin as Treasury Secretary, but it looks like his jobs plan is going to be implemented if Hillary Clinton wins the election. Trump may even implement parts of it because Trump has talked about massive infrastructure spending, which is basically what Larry Summers has advocated. The other crazy academic thing that we're seeing now is both out of the U.S. and Japan. Ken Rogoff, this same guy, is saying, well, interest rates are so low that the U.S. government should take advantage of them, and the U.S. government should start issuing 50-year bonds. Yeah. Well, why are interest rates so low, Eric? Because they were manipulated. So this is the old saying that Irwin Schiff, may he rest in peace, brilliant guy, brave warrior, fighting for truth and freedom, that Irwin Schiff and Harry Brown used to say that, the government breaks your leg and then hands you a crutch. Well, why are interest rates so low? Yeah. Because the government manipulated them low.
In our audience, the market traders and people really savvy with markets will really appreciate what I'm about to say. The problem with a lot of the academics is they really just don't have, they're smart, don't get me wrong. When I tease about my cousin, that dude probably has a higher IQ than me. But they don't have real-world experience that gives them the kind of contextual understanding so as to understand that in this case of, they're talking about borrowing more than $1 trillion. And, yes, they will be able to get an unbelievably low interest rate because of the manipulation that has occurred thus far. And one can even make a rational argument of saying, yes, it makes a lot of sense to borrow like crazy when rates are as low as they are. And, apologies to the Austrian school, some people can even make a rational argument as far as whether or not infrastructure spends like that are actually productive. And they won't be, given the way that things go down in our corrupt system. But all that said, this is the bottom line that these idiots never understand because they're academics and they're not practitioners in the field in which they pontificate about. As soon as they start going into that first 50 billion, 100 billion or whatever of the issuance of this $1 trillion dream of infrastructure spending galore, it's going to start sending expectations through a ringer, and it's going to change the yield curve, and everything is going to go up. And you know what? It could actually blow up the system, because if we get a 100 basis point increase on a 30-year or a 10-year on our yield curve, holy cow, talk about the increase in the amount of debt servicing that will have to happen in the United States. These guys don't understand dynamic feedback processes. That's really, when Jim Rickards talks and makes fun about how the Fed doesn't understand their models, this is an example of the Fed not understanding their models, because these guys just don't know how to think in terms of dynamic processes. They're academics, and the traders and professional investors that listen to our show know exactly what I mean.
Yeah, and they're also blind ideologues who believe in a false narrative, and they apologize for big government. So whenever
all the while, they got people patting them on the back, giving them confirmation bias.
Yeah, exactly. Well, the thing about infrastructure, I mean, there might actually be some infrastructure projects finished, but the cost of them, a lot of these contracts now are unbidded contracts. They're way over budget from what the construction company said was going to happen, and they're almost never on time or anywhere close to on time. Sometimes they take twice as long and cost more than twice as much. So, Obama, in order to get elected the first time, he had lots of shovel-ready projects for infrastructure, right? That was one of the main platforms, besides Hope and Change, that, we're going to create all these jobs with shovel-ready projects, right? And, we're going to rein in the bankers, and we're going to punish Wall Street. Those were like the 5 or 6 main platforms that he was running on in 2008. None of them happened. So the odds of the infrastructure projects actually working and actually helping, I mean, there is going to be some really bad unintended consequences that the central planners are not going to see. They could even spark the massive amount of inflation. We already have, obviously, stagflation now, pretty bad stagflation if you're on Main Street, 7 to 12% per year. And then you add in the taxes, and it's probably even more than that. But, if they go for broke and start printing trillions of dollars, helicopter money on infrastructure projects, that could be the spark that actually triggers massive amounts of velocity of money in the real economy. Because we have had the inflation. You can make an argument that we've had hyperinflation of asset prices. Look at the valuations on certain real estate in certain cities, on certain stock valuations. Eric, we have utility stocks selling for above 20 times earnings. It's just, we have unprecedented. Yeah, we have utility stocks with not even 1% per year revenue growth.
I mean, historically, I laugh, but for the benefit of our audience, historically, a 10 PE would be 10, 12, something like 12 on a utility stock would be the kind of valuation that would reflect normal markets where people aren't doing backflips and extending to reach for dividend yield. But because we live in a ZERP kind of world now where the policymakers have fucked up our markets so bad, people are willing to pay up for a utility stock and produce a PE of 20. I mean, that's amazing.
You're setting yourself up for tears. There's no margin of safety there. You're not buying in at a low price. You're setting yourself up for tears. So a lot of these mainstream mutual fund managers and portfolio managers, these mainstream Wall Street money managers who've went to the same business schools or who know Keynesian economics, they're probably not going to get fired because all the guys next to them are doing the same thing, but they're going to lose their clients a lot of money probably at some point in the future. But I mean, a lot of this stuff, Eric, it seems so surreal and crazy, but you can't make this stuff up. The truth is just stranger than fiction. But I think, we're in such a crazy world right now. The rules of the game they're continually changing, especially since 2008. The powers that be are just more adept at putting out fires post Lehman Brothers. Would you agree with that?
Oh, absolutely. There's a common understanding that's incorrect that, the powers that be in the oligarchy, they're so powerful and they're so able to screw us over. In reality, and there are elements to that. I'm not completely discounting that, the importance of appreciating the degree to which our dear leaders have enormous power. But there's also something that happens simultaneous, and that is that these guys are making it up as we go along because in the financial markets, the degree to which we have completely bastardized everything, where all of the normal ways in which economics work are no longer up and running, where we have $14 trillion in sovereign bond yields that have a negative yield. I mean, they now have created a world where they don't know how to fix things. They are currently thinking aloud in their policy papers and in their talking points from Jackson Hole and on, and the Bank of International Settlements putting out warnings about the state of the affairs of the financial market again, like they were doing before 2007 or 2008 in the crash. They were publishing stuff in 2006, 2007. They were speaking of warnings. I mean, if you know how to interpret what these people are saying, you can tell that they're kind of fumbling along, feeling out the contours of the elephant and trying to describe what an elephant is in a dark room. They really don't know what the heck they're doing. And I'll just, toss out one final example that proves my point. I talked about, I believe it was the last show, it may have been the show previous of Silver Doctor's weekly metals and markets wrap, but when the Fed released their minutes for the last FOMC meeting, they talked about this. Janet Yellen talked about her the consensus of the 70% confidence interval of the varying perspectives of the voting members on the FOMC when it comes to what they believe will happen with the federal funds rate, the prime interest rate that the Fed targets. And these are the policymakers that actually vote on what the federal funds rate is going to be. And you would think that it would be pretty darn significant to see, where they're shaping their expectations on a forward-looking basis, and you would think maybe they might even have a little bit more consensus. Well, no. The spread at this 70% confidence interval for 2018's expectation for the federal funds rate, I'm doing this strictly by memory, so forgive me if I get a small amount wrong, but they expect federal funds to be anywhere from 3.8% to like 0.2%. The mean 70% confidence interval, quote-unquote confidence interval expectation of the people that are actually going to be voting on what, in fact, setting policy for federal funds rate, which is the tip of the spear for the setting of interest rate policy in the United States, which in turn sets interest rate policy, or impacts at least, worldwide. I mean, did I not just prove my point? I mean, of course, forecasting is very difficult, and it's very difficult to not have huge range when one gets 10 or 20 or whatever economists around a table and forgive me, I'm getting called waiting, and I'm dodging it right now, trying to speak without being interrupted, but the listeners, that's what you're hearing, is the pausing. And Jason and I tend to not even edit stuff, so you get raw when we speak. But all of that said about the nature and process of forecasting, and all of that said, and the reality is that this is a perfect example that demonstrates that these people who have their hands on the levers of power really don't know what they're doing, and they don't understand where the future is going to be. They admit it if you know where to look, because it's in their models. And
their models are garbage.
Their models are total fucking garbage, and they're just kind of winging it day in, day out. Whenever you hear Janet Yellen blabber away about, well, we're data dependent, well, that's what this friggin' means.
It's a politician's response that, I'll change which way the wind blows is the way I'm going to go. It's a flip-flop answer with more sophisticated wording.
Yeah.
The thing with these models, Eric, and they claim how accurate the models are, they're not accurate at all. I mean, the results of a study can be preordained by its design, whether it's a poll or a model or an experiment. So you can preordain it by its design if you choose to be. If you choose to do that. The other thing is the inputs, the subjective inputs. So, with the CPI, Bureau of Labor Statistics counting that, they go to I've seen interns talk about, how accurately they collect prices at Target and Walmart and the grocery store. Well, what happens is with items at the grocery store, you have the food companies, they keep the packaging almost the same, they keep the price the same, but the amount of food in the box is 20 or 30% less, and the government statistics are, they're not accounting for this. And this is how they get caught up and screwed over. They don't understand how they're not adapting to how the world's changing. So these models are not to be relied upon, but yet, the Federal Reserve and a lot of Wall Street is relying on these models still.
Yeah. The shrink inflation example you provided, just as, they do, in fact, claim that they try to capture that shrink inflation, and that therefore the price CPI is not inflated as a result. But the problem is that they completely fail in doing that. They only probably capture about 20% of what's going on, and then therefore any shrink inflation is understating the actual impact to the consumer's pocketbook by 80%. I'm just speaking hypothetically; those aren't exact numbers, but just making a point.
Ed Butowski, who has the Chapwood inflation index, he says the inflation rate for most major cities has been running 10 to 12% per year for the last 5 or 6 years.
Yeah.
So it's bad for the inflation on education costs, healthcare, food, rent, utilities, pretty much across the board. The bills are not falling. So you're going to have these academic economists from governments and central banks and top universities screaming about deflation at the top of their lungs while you're on Main Street. If you pay the bills, you know that you're getting less bang for your buck. The food that you can buy is going down. My dad just bought steaks for grilling this weekend, and he was for Labor Day, and he was talking about how much the price of steak has gone up in the last couple of years.
All right, everybody, party at Jason's house. Let's go.
Yeah, so we've got a couple more stories before we get to the scumbag nominee section.
Can you tell my 1 foot of mine is already out the door and ready for vacation?
I hear you, man. I'm just tired.
What a week.
Just tired. I'm just tired of all the negative stories coming out about the economy and all the bullshit explanations from the people in power, blaming other people, anyone but themselves. They need to look in a fucking mirror. So yeah, we have quantitative easing all over the globe. It's way over 180 billion per month. The central banks are going to be expanding their balance sheets by at least 2 trillion globally this year. And the Federal Reserve has already laid out a plan to expand it even further. The other economic mine that's starting to emerge again, Eric, is the oil price. We had that oil rally into the mid-50s. It was very unsustainable for a bunch of different reasons. Both Saudi Arabia and Russia didn't decrease their oil production. A lot of the shale producers that should have went bankrupt didn't, and they've been running their oil production like crazy. So it was pretty obvious to me that when we went from $29 WTI to $55, that rally so quickly, it was very unsustainable given how many oil producers didn't actually go bankrupt and how the large producers didn't cut any of their production. And, the global economy is slowing down, so demand's probably going to drop at least a little bit too. So we are, I think, a little above, we're around 42. Let me pull up the WTI right now. I have the website. We're at 44 WTI as of the recording of this podcast Friday, September 2nd.
Actually turned in a pretty good 3% up move today. Actually, that's impressive. We saw we saw risk assets across the board go up a lot in response to this whole jobs number changing the expectations that were set last week about interest rate normalization, and then all of a sudden that going out of the window. Apologize for interrupting, but it's probably the most important dynamic that we saw this whole week, and I think we're going to see the markets move up in response starting next week.
Well, if the oil price does break 40, or God forbid it goes to 30 or lower, we're going to see the banks try to come in and do some market manipulation, financial engineering to move the oil price higher, because they do not want to start calling in these loans for the oil companies. That would just set off a potential another chain reaction like what we have with the European banking crisis, which would probably mean the Federal Reserve would have to step in with more currency swaps. I actually have a funny story about the currency swaps. I was in this Austrians in Finance group that was created. We've had other guests talk about it. Many of our other guests talk about it, professionals who are Austrian school who work in the financial industry. And I was telling them about what I heard at the IMF meeting in 2014 about currency swaps. And a few of them just started to really argue with me like crazy, telling me, oh, currency swaps are only short-term loans and they always have to be paid back very, very quickly. And one guy even sent me a link telling me that the Federal Reserve has only declared $22 million in currency swaps on its balance sheet. I mean, how accurate is that? We don't even have any audits of any of these central banks, especially the Federal Reserve. We had a one-time partial audit. Look at all the crazy stuff Ron Paul had to do to get just the one-time partial audit. And look at how much money they gave out then. So for someone to actually believe, and he was a libertarian, and he believed in Austrian school economics, and he trusted that number that there was only 22 million
and
outstanding.
He believes in the Easter Bunny.
I have a bridge. If I should respond to that guy. I have a bridge to sell you, because I mean 22 million. That they probably do more than that in a day for currency swaps. I mean, given what's been going on, Eric, with the European banks and how we've had the European bank stocks not totally collapse yet.
Yeah.
So we know that central banks are in there trying to delay the collapse of the European banks.
It's kind of something that probably comes in fits and starts or bursts. They do a big swap, and then, Fed's sitting on some euros that they're not declaring, and then the ECB all of a sudden has a dollar liquidity that they have to solve the problem of the quote-unquote dollar scarcity. And it is, in fact, the case that we have not seen the 30 trillion plus or whatever it has been that it was ultimately put into the market stay in the market. I mean, this stuff does get recalled, but I would say to the person making that argument, well, why is it that the Fed never was disclosing the trillions that they were doing in swaps when in fact they were doing it? And they only were able, they just got busted. They got called out on it, and they were doing all these things behind the scenes and not declaring it. They're hiding a magnitude of currency swaps that we already know is a fact.
Yep. And they've been doing it, Eric, every single crisis for decades now. So they were in much smaller amounts, but the Wall Street banks or whichever central bank, whether it was Mexico or the Asian tiger crisis or the tequila crisis or other crises, it's just gone exponential with the currency swaps. And in a lot of cases, these things are off balance sheet and they don't have to declare them on their not that a lot of these central banks are honest with their balance sheet anyway, but they don't have to announce that we're the Americans, we've bailed out the banks, we bailed out Mexican banks, we bailed out the Mexican central bank or Asian central banks, which would anger a lot of American citizens and bring out the pitchforks. I can imagine how many Americans would get absolutely angry when there's so many more problems in the United States that the Federal Reserve is bailing out foreign countries.
Yeah. I kind of long for the days of the Brady bond bailout of Mexico. I think it was 1984 or something like that. I mean, back in those days, the Fed was just transparent and honest with and the Treasury was just transparent and honest with the bailout. And now we live in this world where everything is so bad that they have to hide everything because it's so bad that they fear people would be they would be enraged and the pitchfork would come out if people had any idea how unbelievably. I mean, everybody within the sound of my voice is on the hook for this stuff because it's going to basically impact us in terms of our day-to-day economic life, but also too, we're not going to escape the taxation of this. Ultimately, the problems that we have in the United States are so bad that one way or another, debt is going to just go to debt heaven, and probably from some kind of an implosion in the financial markets. But theoretically, when they try to sustain all of these spinning plates in the air, we're all on the hook for it because it's our money that they're using to protect their assets.
Yep. And I mean, the debt problem in the real economy is just really bad too, with the bubbles with the student loan debt and the subprime auto loans, which are potential bubbles about to burst. We did CNBC. I actually saw a story a couple weeks ago. I did a video about it, that they actually admitted that there's a $1 trillion pension fund shortfall in different states in the United States. So these are the states with the largest teachers unions in many cases, or the largest government employee pension funds. So states like New York, New Jersey, Illinois, Michigan, and California, these are the ones who are going to experience the crisis first. And if you're resident in those states and you're not a government employee or a teacher, you're probably going to bear the brunt of this because they're probably going to be, these pension funds are going to be going to your state capital and trying to increase taxes on local residents there, and probably also on tourists. Now, Eric, we have a couple more stories before we get to the scumbag section. We have the RMB going into the SDR very soon, and we also have the SDR bonds being issued at the behest of the Chinese. We
do indeed, and a lot of people are talking about that in the alternative space, the alternative assets community. And I would have to caution people in not making too much of the significance of these events for the near term, and there are definitely a lot of newsletter writers right now that are talking about this being a catalytic kind of event that will, upend markets next month, and dollar reserve status flushing down the toilet within 6 months. I mean, there's some pretty outrageous stuff going on as far as how people are extrapolating the timeline by which change is going to happen with these events. But all of that said, it is a very significant transition going on, and you and I have been talking about this since our very first shows. China has been in kind of a strategic waltz with the West, where it tries to maximize its ability to be within the West and benefit economically as a result, but simultaneous to that build up all of their other means of infrastructure with the new investment bank and their buttressing of their financial markets and the Shanghai Cooperation Agreement and on and on. Bilateral relations, really big ones with Russia and so forth. And the reality is that they're playing a long game of decades plus in duration, and they're getting into the SDR basket is going to be able to see the renminbi share of reserve assets, Chinese bonds, in central bank or sovereign wealth hands move from almost next to nothing now. I mean, China's renminbi is a very major currency, and it represents the fourth largest currency in terms of the purchase power of the transactions that go on in any given year. It's a very, very well used currency, but it is not, as of yet, a currency that is significant in terms of its percentage of reserve assets held by sovereigns. And we are now somewhere in the neighborhood of about 0.7% of net reserves, and this move is going to, as per what China's goals are, what their policymakers are thinking, they're looking to get the renminbi and Chinese bonds to represent 2, 3, 4, 5% of reserve assets within the next couple of years, and that's what they're trying to do with this.
Yeah, and Jim Rickards, I think it's probably mostly Agora Financial's marketing team because of the way they do things over there, saying, everything.
I need to interject. I was not directing a subtle criticism towards Rickards' direction. I have other people in mind behind the comments that I just made, and I think some of our listeners probably can figure out who I mean. But
yeah, there's a couple of them besides Jim Rickards and Agora Financial, so I don't want to just
Rickards
pick on him.
But sober. Rickards is his analysis is something I largely agree with.
Yeah, so we have a couple more anecdotal stories about the economy and why it's not doing as good as the government statistics are claiming. So this was from my contacts here in the D.C. metro area and just my observation of people posting on Facebook in the area. So there's a lot of homeowners, Eric, around here that are renting out their basement, that are renting out spare bedrooms, like a lot of them, like more than I've ever remembered in the past, like people desperate for extra income, trying to come up with, an extra $800 or $1,000 a month to rent out a basement or a spare bedroom. Or I've even seen, this is kind of getting crazy, people are willing to subdivide the basement or a spare bedroom into just like a cot and a bath. So you get a cot there for less. Yeah, man, it's getting that way.
So what does that run? $500 a month?
It's like $500 to $800 a month in some cases, depending upon the things are very expensive.
The cost of living in D.C. is just so amazing.
The cost of living in D.C. is up there with New York City and San Francisco. It's top 3 routinely in the United States. Yeah. Most people don't think that, but if you get a job here and you move to D.C. and you're only making like $50,000, you're not going to be able to save any of your money. The money for your rent, your food, and your other costs, it's going to be gone basically right away. So if you're only making $50,000 before taxes, you better figure out a way to be one of those government employees than making a 6-figure salary, $140,000 a year who can't be fired. Okay, and the other thing I'm seeing is from my friend who's actually a good real estate agent in the area. He works at one of the better real estate agent firms, and he was telling me that a lot of the people who just graduated college in the last couple of years and they actually have a job. So these aren't kids who are hoping to find a job and their parents are finding their bills. There's a lot of those too. Their parents are paying their rent, and their parents are paying their bills and the rent and telling them, "Oh, go find a job, pay part of your money, and you're okay, and you can still, do whatever you want." These are people that have full-time jobs, government employees, teachers, maybe even low-paying private sector jobs, because a lot of the entry-level jobs that are available around here are very low-paying entry-level jobs. You know, they're $30,000, $35,000, $40,000 a year. You're lucky if you get 40 or 45. That's almost management level around here. And then you're working, you know, 7 days a week, 60 hours a week. But, you know, a lot of the entry-level full-time jobs in the private sector are very low-paying on a before-tax basis. After tax, they're even worse. Their parents, he told me their parents are, the rent checks are coming in from the parents in a lot of cases.
Yeah.
So, you know, this is something that people aren't discussing in polite conversation. So when there's adults out at dinner parties, they're telling their friends how independent and hardworking and how successful their kids are while they're still paying their rent checks and stuff. So I think this is a lot more prevalent than a lot of people out in public would care to admit.
In the Great Depression, we had unemployment in the 30+% range. Right now in the United States, for the entire population, I think we're easily at 20%. And when you talk about subgroups like college kids recently out of school, I mean, who the heck knows? It could be as bad as like 35%. And the underemployment and the inability to find, you know, an ease of rising up a ladder by getting entry-level jobs and moving up. I mean, the labor force is in a really bad state.
Yeah, I agree. And even managers now, Eric, are only making like some of them $50,000 to $65,000 a year. But you're basically a wage slave then, because they're expecting you to work almost every single day, 10, 12 hours a day, with very little time off. So, you know, I think unfortunately this is a new normal. And a lot of jobs, you know, because interest rates are manipulated so cheap, it's now cheaper to invest in robots and automation in a lot of industries. So this is going to have an unintended, I don't know if it was done intentionally or not to manipulate interest rates this lower to make investments in robots, but that's what's going to happen.
Yeah.
Okay, well, we're to the scumbag section, and before we get to some of the bigger ones, let's talk about some of the smaller ones. So first, I'm going to nominate Huffington Post for firing my friend David Seaman, who was on an interview here 4 or 5 months ago, approximately, for writing an article about Hillary Clinton's health. So that's pretty messed up. He was able to find a job. I think Alex Jones at InfoWars hired him to write articles, and I'm sure he'll probably land on his feet. But he just took down his Twitter. He pulled off his Twitter, and I'm not sure if he's going to do any more YouTube interviews. He's not in a good place right now. He's kind of freaking out about things that are going on. I don't blame him after all the publicity he's been getting, though. Really messed up, though, for, you know, just freedom of speech. And look at all the news and stories that are out there about Hillary's health from 4 or 5 years ago. Dr. Drew got fired, too.
Yeah, and, you know, we should explain what exactly happened to him, because some of our listeners may not know. All he did was include a single YouTube link. It was either a YouTube link to the video that Paul Joseph Watson had produced for InfoWars, or it was the link to the article that Paul Joseph Watson had written that included the YouTube video that Watson had produced. I forget. I don't remember which it was.
It was the video. It was the video, and he put Hillary's health. He put that in the keywords to get it more views, because, you know, the topic was trending, and he thought it was worth commenting on.
Right.
And
there were more than 3 million people who had already seen this video. It was a newsworthy event, and all he did was include a link so that other people could know that this existed and people were talking about it. I mean, that is very fair game as far as what journalism is supposed to be. And Huffington Post fired his ass without even talking to him at all and erased his entire archive of articles. And that's the kind of Orwellian, you know, I mean, who the heck knows who made a phone call to Huffington Post's managing editor or whomever?
They didn't have to make a phone call, Eric. Did you see a picture of the editors at Huffington Post? They're all white. There's like 15 or 20. I saw pictures of them going around the internet.
It's a very good point. I mean, it's self-censorship. That's the way most censorship actually occurs in our media. It's people following their own perception of what is in their own sense of their own self-interest, and that's what probably happened. You're right, but
yeah, it's 15 or 20. For our listeners who are not familiar, you can look this up on Twitter or just Google it. It's 15 or 20 white women who love Hillary Clinton who are the editors at Huffington Post. So sitting around a table smiling, and we know from the Hillary Clinton emails release that she reads Huffington Post basically on a daily basis. So they were probably worried that she would see it and give a nasty phone call. So they, got rid of it and got rid of David Seaman before Hillary Clinton saw it.
Totally see that as being entirely plausible. And I can just imagine Hillary sitting in her chair going, "Ooh, what did they write about me today? I really need the affirmation."
Yeah.
Psycho.
Well, and then she would call for the editor's head. So I guess they did that to probably save themselves. Maybe they fired him. But what does that say about our culture? The funny thing about Huffington Post, Eric, is 2 or 3 months ago I got it was unsolicited. I got a random email from this lady at the Huffington Post telling me that our content at Wall Street for Main Street would be perfect, quote unquote, perfect for the Huffington Post outreach program.
outreach at that.
And
little did she know what kind of thing she was flirting with.
well, here's the thing. I was asking them, well, how would you use my content? Would you try to steal ownership of my content or take ownership of my content and have me sign all these legal forms? You have so much growth.
They're going to use your editorial tone and understanding of economics to convince people that we need more minimum wage across the United States, and that's why they're calling Wall Street for Main Street, to get your populist perspective. I mean, come on, maybe it was that stupid.
Well, that would be funny if they did try to hijack it that way, but I would just say, we need markets to clear. We need real deflation. We need wages to fall.
Of course, I think you may have missed my point about the irony of how these guys, these gals in this case, they're probably not even really fully having their hands on their own wheel of their ship.
Yeah. So needless to say, I will be not contributing to the Huffington Post outreach program.
Yeah.
I don't care how much money they throw at me. They actually said they weren't going to pay me, but no matter how much money they offered, I still wouldn't accept it.
They probably would have figured out their mistakes soon enough.
Yeah, so we have that. That made the top story on Zero Hedge for a day or two this week. So it's just dystopian the way that the media is eliminating free speech now, and they're talking about that on college campuses too, getting rid of free speech. So things are getting really crazy now. If you don't love Hillary Clinton or Obama or Bernie Sanders, even Bernie Sanders is a radical, but at least they would somewhat tolerate him, like you said in our past Welcome to Dystopia, he was a steam valve for the Democrats.
Right.
So they would at least put up with Bernie Sanders people because they at least hated capitalism. But I mean, the other side, they figured out how to phase it out with the media. It's crazy. Okay, so the other small one before we get to the larger fish is the Department of Agriculture agreeing to buy 11 million pounds of cheese for $20 million to boost prices for dairy farmers. This is just ridiculous, the intervention we have, Eric, in so many different phases of the economy with government agencies.
I'll go get my Minnesota cheese hat.
Well, I mean, why not let prices fall? It's just there's been a dairy cartel in the United States, I think, for over 100 years, for people who are not familiar. So there's been market intervention even before the New Deal, and Herbert Hoover and FDR were paying farmers to grow oranges and then let them die on the field and not give them to not let prices of oranges fall or give them to charity. And I think it was prison time, actually, if you went to try to go to Florida or California back then and grab an orange when they were paying people to let them die.
Yeah.
So yeah, it was some crazy times. It was like Soviet Union level planning almost. Not quite, the massacre that Stalin did with the Ukrainians over the wheat crisis, where 6 million Ukrainians were killed, basically starved to death in a couple years, but almost as bad. So that was a small one. It just shows you guys that the government is just desperate and throwing spaghetti at the wall in so many instances. And then, they blame the private sector and the free market and capitalism. It's all their fault. It's all the greedy people's fault. Now, in some cases, there are the large corporations who have figured out a cartel and ways to hijack the government agency. But if the government was a lot smaller, they wouldn't have the ability to do so.
That's the norm. I mean, we would, and this goes back to one of the conversations you and I had about, the nature of our system and communism versus crony capitalism and fascism. And by and large, we live more in a fascist society than not. And we have socialism as a form of steam valve mechanisms that, there's socialism in the sense of the welfare state, and that keeps people from rioting. We were talking a moment ago about how the unemployment rate is well into the 20s. Can you imagine what it would be like if we didn't have 1 out of 6 people on food stamps in the United States? And we don't have food lines in the United States like we had in the Great Depression because we have a welfare state that's gigantic in size, and it serves as a steam valve. That is the socialistic steam valve that helps keep the system humming.
Yeah, and our listeners should go listen to that Thomas D. Lorenzo interview I did 3 weeks or a month ago. It's just outstanding with his new book about socialism. I think, Hayek and Mises wrote about this. I think, the fascism we have, Eric, is the compromise that a lot of people realize that a socialist, fully social planning economic system would turn out like the Soviet Union or Venezuela and would totally collapse. So the compromise they have is redistribution of wealth. And the harder you work, the more you produce, the more you're taxed.
Well, I think it's even more direct than that. I mean, the people who have assets and resources want more of them and more power, and in order to get it, they attach themselves and their tentacles to the organs of state and use the state's ability to pick winners and losers.
Yep.
That's fascism. That's not socialism. That's fascism. It's corporatism, as Mussolini described it.
Well, I'm just saying, though, that they've reached some type of compromise because they've seen evidence that it's failed. So they were transitioning to the fascism, that fascism was acceptable to a lot of the socialists because it would still accomplish a lot of their goals that they had for society, their central planning goals. But we've got 2 more scumbag nominees. We'll leave the best for last. We'll do the EpiPen CEO first, the entire company, actually, Mylan Pharmaceutical. Okay, so brief backstory. The CEO was involved with the Clinton Foundation, and in the last couple years, if you're not familiar with the EpiPen, I think the price on it spiked. It went up 600%. They jacked up the price of 600% in the last couple years. The materials that they use are really not that special, and the FDA, the Food and Drug Administration, which is, protects cartels, which are the large pharmaceutical companies in the United States. They don't like competition. They deny and shut down a lot of small biotech companies and competitors. They shut down generics, too. They blocked a bunch of generic models of the EpiPen. So Teva Pharmaceutical and others were applying to make a generic version of the EpiPen at an affordable price, and Mylan was using the FDA and its other cronyism to get it blocked. And also Mylan was going to schools in different states and different counties, and they were negotiating, long-term supply deals where each school had to have 1 or 2 EpiPens. The nurse had to have them, and then the EpiPen expired after a year or so, and they had to throw them away if they didn't use them and buy more. So in a free market with competition, this type of thing would not happen. The price, the quality of the goods, there would be higher quality goods and services over time, and the prices would fall. But yet, we have the funny thing, Eric, is the CEO of EpiPen was actually trying to blame capitalism and free markets for why she increased the price. I just think she's a corrupt, dirty bitch. So,
and therefore, a scumbag.
Well, yeah, she's a scumbag. I mean, if she's associated with the Clinton Foundation, where there's smoke, right? So,
yeah.
She's been pretty freak. And I think she was also, from one of our listeners told me this, I think she's also like the daughter of a senator too. So she's used to, the privileges and spoils of Congress and how to work the system to get rich without really doing much. So I think she was a daughter of a politician too. So she has cronyism and corruption in her blood. Although, in the past, maybe there weren't as many corrupt politicians. There was more people with honesty and integrity like Ron Paul. But nowadays, Ron Paul is by far the exception and not the norm.
It's related to a process of entropy in empire. and yeah, we've been over this ground many a time.
Yeah, but
it's getting worse because of the nature of our system. I mean, we have a system that is no longer producing as much as it once did, as easily as it did, and therefore, people are fighting over scraps. We have, for example, perfect example of that dynamic I just explained. After the financial crash, you have all the wealthy people in our system, paranoid about their assets going up in smoke, and what do? They get the system to save their assets.
Yep, Warren Buffett and the other guys getting the sweetheart deals for bailouts and things like that. Yeah, excellent point, Eric. That goes back to I read this in Michelle Caruso Cabrera's book, this analogy. If there was more free markets and there wasn't as much regulation and taxes and inflation and cartels throughout our economy, the economic pie, picture the economy as this pizza pie or whatever pie you like to eat, either a dessert pie or a pizza pie. And normally when the economy is allowed to make investments, there's savings allowed, people aren't scared to hire full-time employees, so small businesses can reinvest and hire employees and grow, the pie can grow. And if the pie grows in real terms, then there's more pie to feed everyone. So there's more slices to cut. There's more and more pie growing, so it can feed more and more people. What we have now, Eric, though, is where the government's lying that the pie is growing, but in real terms, the pie that is our economy is shrinking, shrinking violently, basically every year. And we have, larger groups and corrupt cronies and special interest groups fighting over larger and larger slices of a shrinking pie.
And while this is going on, at the same time, we have income inequality now having reached a level that equals, if not exceeds, the worst level ever in the United States' history. So the pie is shrinking, and the people at the top who have the biggest slices are taking even bigger slices.
Well, that's because they've created a debt-based fiat currency. They force people to use credit cards just to try to keep their standard of living we have people using credit cards to pay off one bill with another just to buy themselves time. We have students in debt up to their eyeballs who some people don't even pay back their student loans till they're in their 60s. My generation, the beginning of millennials or end of Generation X, we might not pay back our student loan bills for a long time, if at all. So, that's serfdom. So, there's going to be income inequality, and the gap is going to grow when there's new types of serfs. That's how it is throughout history. The big pharmaceutical companies, though, Eric, people talk about the Federal Reserve and a cartel. Everyone thinks that not everyone, but a lot of people think that the Federal Reserve is the only one. There's so many throughout our economy. The other one is
we have nothing but a cartelization of everything. All of our industries are cartelized. It's just,
exactly.
We have oligopolies everywhere.
Yep. We have fascism and cartels protecting a lot of different industries. A lot of these large pharmaceutical companies, they use the FDA to put out of business or small little biotech companies, so their studies are denied or their drug tests don't work. They say their drug tests don't work, and they have to go and raise money, and then the share prices fall of the biotech company. And then the large pharmaceutical companies can either copy the patents directly and not even pay the small little company that did the innovation any money, or they buy up the intellectual property for pennies on the dollar after the share prices crashed. Mm-hmm. And these are the large pharmaceutical companies, Eric, that in many cases the FDA approves a lot of drugs that the pharmaceutical companies know are going to kill people, and they block good drugs from smaller little biotech companies that will actually, help people and save lives. So the incentives are perverse, and a lot of the problems are because of the government agency. And, there's a lot of Democrats and progressives that would say, if we could replace the regulators at the FDA with people with better morals, or they're better trained, we could fix things. Or if we gave them more money and they could hire more people that have better morals and are better trained, that would fix things. I would say it was the exact opposite. I would say, that the drug companies would need to we would need to eliminate the FDA or drastically reduce its size, and tell the consumer that they're going to have to do research, and there's going to have to be independent companies then that aren't going to maybe take money from the pharmaceutical companies like the FDA is, and the independent companies that test drugs to see if they're safety, they'll release more unbiased studies, and then the consumer will make a decision looking at these independent studies and to see if the drug is safe and if they can take it. So there'll be multiple private sector companies that are testing drugs instead of the FDA. I think the free market could solve this problem of, would drugs be safe, or will people die by having, private sector companies do the testing of drugs rather than that are separate from big pharmaceutical companies rather than the FDA.
Yeah, or just, find some happy medium where, maybe we won't go and completely do away with the FDA, but they are so captured in terms of regulatory capture that their mission is not being served in the slightest. And what we get in terms of our healthcare system is a lot of, really bad outcomes that end up, in fact, increasing the cost of healthcare and making healthcare less accessible to a lot of people too. So these are subjects of grand consequence, even though it's sometimes difficult to wrap one's hands around all of the various nuances and whatnot. I'm more of a constitutional minarchist in my thinking, generally speaking. I'm not, full-blown 100% pure libertarian or what have you. And there's a role for government to at least have some oversight and regulation, but what we got now is just, it's not working.
Well, I'm for limited government too, but I don't think government needs to be involved in people's health care, telling businesses that they have to provide, Obamacare, all these other healthcare things.
Yeah.
So I don't think healthcare is something the government. I don't think healthcare is something the government should be providing, with death panels, or rationing of health. Well, the more polite way of saying death panels is healthcare rationing,
and that's
what
not
Hillary,
a conspiratory theory,
yeah.
folks.
Well, Hillary's been.
It's written in the Obamacare Act, which came in two phases.
Yeah.
And we spoke about shovel-ready jobs. Well, when Obama put in the first phase of Obamacare in 2010, it had hidden within it, and Dr. Janda, my friend Dr. Janda, is one of the, I don't know if he's the one who discovered it, but he's certainly the person who enlightened me to the fact that this is how they snuck it in. The death panels that you speak of are modeled off of the British and the Canadian healthcare system in terms of allocating services based on the pros and cons of the expected outcome in terms of benefit of lifestyle improvement or longevity or whatever that a patient would presumably experience based on nothing more than just the statistical history of average patients. So you are a number, and your health care is in fact being decided and ever increasingly so in the future as this system begins to grow and kind of usurp like some demonic octopus and doing away with health care from the private sector in the United States. Who knows what the heck is going to end up being the final, or what will our healthcare system is going to look like 10 years from now after this disaster runs its course?
Well, Obamacare was designed to fail, I think.
That's
so
right.
They could blame it. They could jack the prices up. The prices would go up. Then they could blame it on the evil insurance companies in the private sector.
And that's not a conspiracy theory either. There are absolutely people who worked to develop this policy, knowing all along, like that God, what was his name? Jonathan Goober or Uber? Or
there was the professor who bragged
that MIT asshole who said we had to lie to the American people so that the American people would swallow the medicine, pardon the pun, that was due for them.
Well, Hillary has been trying to get a version of this passed since she was the first lady under Bill Clinton, right? So she's been trying to get versions of this passed, pushed across for a while. So it's just amazing. A lot of people are going to figure it out now because their bills are going up like crazy. I heard Craig Hemke talk in his interview on Greg Hunter. I don't think it was his most recent one, but one of the last 3 interviews he did over there. He said his bills have doubled in the last 3 years for his family.
Nationwide, they're already. I think it was one of the Humana, or maybe it was Kaiser, one of the large players in the industry, but they're talking in their estimation that 2017 premiums nationwide will go up 17% on average, and that's what they think is going to happen based on today's conditions, and they're going to be wrong. It's going to be a higher number. People are going to be shocked when they see what happens to Obamacare.
Well, there's even before Obamacare, Eric, there was so many hospitals, because they get reimbursed from the government, that's the way the healthcare system was set up, that they would drastically overcharge the insurance company, and then the insurance company would say, oh, look, we saved you some money, but it was still a jacked up price that you had to pay compared to the real free market price if you could actually get some competition for different prices and price amount. In a lot of cases, you can't even get the price for some services in healthcare until after you've already gotten the procedure done. And then they calculate it out and figure it out, and too late, you're stuck with the bill. So, I mean, the system, I am in favor of limited government, but I don't think the government, this is one of those industries where the government should not be involved. It should just be the patient and his doctor, and the insurance company should figure out, they should let the doctors decide what is needed, and the doctor should figure out it shouldn't be the case, right, like it is now, where the doctor just hands out prescription after prescription after prescription and gets you addicted to, 7 or 8 prescription medicines when you really didn't need that many to begin with. Because I think, there's so many solutions now in medicine where the doctor doesn't need to prescribe medicine, but because there's pressure on them to, or economic incentives, that, if you have one symptom, they're giving you a prescription. Then there's side effects. Now you have to be on 2 or 3.
Yeah. We do themed shows now and then. The robotics show is our 3rd show. It's a great show. We should get Dr. Janda on sometime and talk about the state of healthcare in the United States and where we're going, what people could do, not just bitch and complain about the state of where we find ourselves, but maybe even explore some of the things that people are doing now when it comes to trying to get, different ways of medical insurance. I'd be happy to talk to him about that and bring him on for a show, because I think that it's a really important subject. I mean, it's 16 some odd % of our economy is our healthcare system. It's the make or break expenditure for a lot of people. Most people aren't. A lot of people in the United States are not, choosing healthcare because they're deciding whether or not they're going to be able to eat or get healthcare.
And healthcare is also probably the most important one, but preventative medicine is more important. They don't teach a lot of that for doctors, but if you eat right and you exercise and you learn what proper nutrition is, you can eliminate a lot of health problems right off the bat that way. Yeah. But they don't even teach that to doctors in medical school. I mean, most doctors
are profitable to teach that in more ways than one.
Yep. Well, most doctors who have gone through medical school, they only have one class. My dad is a retired orthopedic surgeon. They only got one class in nutrition. All the times he was in medical school. Okay. Well, we have one more scumbag nominee. This one's going to surprise maybe some of you listeners out there. I am nominating Libertarian presidential candidate Gary Johnson for a scumbag. Okay, why am I nominating Gary Johnson? Because it seems like every time, Eric, he opens his mouth now, he says stuff that isn't even close to libertarian. In the recent past, he's endorsed the TPP, Trans-Pacific Partnership. There's a new article. We'll attach this for listeners to read. It's from the Ron Paul Institute. It's Gary Johnson and Bill Weld Presidential Campaign Dragging Libertarianism Through the Mud. I think this is by Adam Dick. Based on his new book. So, Gary Johnson is also talking about removing people's Second Amendment rights in certain cases. He's talking about reauthorization of certain things in the Patriot Act. These just don't sound like things a libertarian would say. The sad part is, I think he's probably the best candidate out of all the choices. And I'll tell you why. I was talking about this before we recorded the show, Eric. I actually don't like Gary Johnson. I didn't like him before he said some of this stuff, but the Libertarian Party needs more campaign financing in order to be a viable third party. And I'll probably vote for Gary Johnson if I vote at all in the November election, because the Libertarian Party needs more money. And I think if the Libertarian Party got more money, hopefully they can find better candidates that are more libertarian and better candidates than Gary Johnson. Also, when Gary Johnson was governor, some of the things that he's claimed, like he balanced the budget, he wasn't producing surpluses in the budget. He was like eking out like maybe a tiny budget deficit or a flat budget year in and year out. And I think he's obviously in great shape. He works out a lot. I think he spends way too much time working out and also smoking marijuana when he could actually spend more time, reading Austrian School of Economics books. Last time I had spoke to him and people around him in 2011, I was at CPAC and he was standing right next to me. And I asked him, do you like Henry Hazlitt's Economics in One Lesson? And he said, what's that? So he doesn't represent then a libertarian like me. Now, not every libertarian believes in the Austrian school, especially as much as I do. But for him to at least not have read a basic like Economics in One Lesson, it's he's libertarian. I feel like he's libertarian in name only.
Yeah. And supporting him all the same and the rationale that you have laid out really does boil down to the fact that it would be nice to see the United States have a little bit less of a two-party, fake one-party, masquerading as two-party system. And we probably will never, ever see that until we actually do have the economic crash that we speak of on all of our shows, because that will change the political dynamics in this country in a very profound way. And that's going to happen.
Yeah, I agree. The way the system is set up right now with the two-party system, it's all a spoils and privilege system. The two parties, they hate each other, but Jesse Ventura actually gave this great explanation of the two-party system. He said it's basically like professional wrestling. Mm-hmm. So he said, like, on camera, they're calling each other's names, they're calling each other really nasty names, they're punching, fake punching each other, may even hit one of the guys over the head with a chair, right? But off the camera, they're laughing they're going to parties off camera. They're when people aren't looking, they're going to parties together, they're laughing and they're drinking and they're good friends.
Yeah.
So that's how I feel the Democrats and Republicans in DC are, that when the cameras are off, they're probably pretty friendly with each other. We do know actually that Donald Trump, he was a registered Democrat prior to 2009. He was actually friends with the Clintons. So I don't know if he's friends with the Clintons anymore, but we'll have to see what happens after the election and how things play out.
It's a big club, and you ain't in it. To quote, or to paraphrase George Carlin, the great comedian.
Oh yeah, that's a good one. Did you hear, Eric, that Donald Trump tried to get an invitation to Chelsea Clinton's wedding, and the Clintons told him to go fuck off?
Yeah, and I give him the routing number to the Clinton Foundation and say, hey, if you want to come, you know what to do.
Hillary's like, a seat in this section will cost you this donation.
Right, exactly.
A seat in this section will cost you this donation. If you want a picture with Chelsea Clinton and the groom, then you need to make this donation, because everything is pay to play.
Yeah. You get 9 figures, we'll make you the best man.
And Bill will give you a speech. Do you actually
we're having way too much fun here. How long have we been recording? I think
we're over an hour 20 minutes. So this is going to be the longest show
ever. The longest one we've ever done.
Yeah, this is the longest one. I was actually going to ask you before we go if you actually think Bill Clinton or Hillary Clinton actually do any of the speeches that they've been given bribes for.
Oh, God. Well, let me put it to you this way. Certainly with respect to Hillary, I can guarantee you I'd be willing to bet my life that she would in the very least make sure that it's something she'd approve of before it left her lips. I mean, that control freak kind of dynamic definitely is up and running with her. So, but they probably have all their stuff done for them, including their speeches, and maybe even Hillary has somebody brush her teeth in the morning if she ever brushes. Who knows?
I heard she has a long list of demands like a diva in order to go travel somewhere and give a speech. Well, give a fake speech, or maybe to pick up the check for a bribe.
Right.
Actually, you wouldn't even need to pick up a check because that would be too difficult. So they could just wire the money to any of the subsidiaries offshore, because we know that they're doing money laundering pass-throughs from Charles Hortel. Oh, by the way, Eric, before we go again, did you see that it looks like YouTube and their algorithm, Google algorithm, they've capped the amount of views my Charles Ortel interviews are getting. They basically, the views just totally stopped all of a sudden.
Yeah.
I guess they're trying to help out Hillary by not promoting too many of the damning interviews against her.
Yeah, well, the other day we had that story on Zero Hedge talking about how when you type in on Google, Hillary and then health or whatever, I think it was the example of Hillary's health. So if somebody arriving at Google, they type in the first word Hillary, and then all of a sudden, in most cases with their browser, would start pre-populating other examples that they could select from to do their search. And on all the other search engines, Bing, whatever, somebody would experience typing in the word Hillary, and then health would come up next because the system is presenting the most frequently searched term that people all over the world are entering. Well, Google don't want any of that. And how do you shape public perceptions? You take away, you memory hole the search result of Hillary's health showing up first. In fact, it didn't even show up in the list at all of search results that are presented to somebody who would, enter in the first word Hillary. That's the kind of very subtle censorship that is going on by design, but when you add it up in terms of all of the ways in which these kind of things happen, that's how you get a society of zombies. It's everywhere. The amount of censorship that's going on in the United States is just mind-boggling.
Well, welcome to Dystopia. Yeah, and we do have a lot of brainwashed Americans. There's actually a good video by Lauren Southern of Rebel Media. Send it to the women in your life who are going to vote for Hillary Clinton. She's talking about why regular women in the United States should not trust Hillary Clinton just because she's with Justin Timberlake or Katy Perry. By the way, she paid them off to take photos with her, and she's been paying off popular YouTubers for extra publicity as well. So yeah, she's been using Hollywood and Wall Street to gain advantages in this, and the mainstream media to gain advantages in the system. Well, I think that's
No, I was just going to go off on another tangent. I mean, really, the bottom line with Hillary, what's most obnoxious about her, the sin that is Hillary, that is the most obnoxious she has committed, is that it's not an exaggeration to say that she's a war criminal. She was very much involved with the policies that set up the overthrow of Libya and the attempted overthrow of President Assad in Syria. As a consequence, it's nearly 500,000, if not more, people are dead because of these policies. 500,000 people, and we're in a situation where the American people may elect a person that was involved at an instrumental level with policy that's behind the death of 500,000 people.
Yeah, and she totally screwed over all the people in Haiti, too. She raised well over $100 million for the poorest people in Haiti, was supposed to build houses and give them food. And I've heard from people who have visited Haiti. I've seen interviews of people who have visited there routinely, and they've never seen anyone from the Clinton Foundation building houses or giving out food. So all that money, like more than 96% of the money that was raised, was pocketed by the Clintons, straight up stolen. And, to steal, to be that rich and to steal from the poorest people in the world, it's so messed up. You brought up war criminal. I mean, that's a crime against humanity.
That's a very, very serious word to be dropping, but the word fits. Hillary is a war criminal, and we're in a place where we may be electing a war criminal, and that's shocking. And she's so crazy that she's the kind of person that in certain scenarios where her back is pushed up against the wall from some political machination that she gets involved with or whatever, and, this is the kind of person that would easily wag the dog and take us to war just to distract away from personal corruptions of her own making. And
I completely agree.
That's what's so amazingly dangerous about Hillary. This psychopath could easily get the entire human race extinct.
Well,
I am not exaggerating.
Not only that, she's talked about taking away everyone's guns, and she's, singled out Alex Jones and Breitbart in speeches.
Right.
She wants to eliminate she would label us alt-right. We prefer alternative media because, I actually think libertarians are more in the center than alt-right, but than they, far right, but because I'm economically conservative and socially liberal, so
yes,
but they label us far right. So the stuff that is being talked about. Hopefully she doesn't win the election, but they're trying to. The people in power, the elites, are trying to stack the deck for her. Welcome to Dystopia again. So this has been episode 27, and welcome to Dystopia. If you guys have any more comments about the interview, or you have any specific guests for future shows, just send me or Eric an email. And thanks for listening, everyone.